In the last video, we talked about the user interface of the QuickBooks. In this video, we will take a look at the chart of accounts. So to access the chart of accounts, you can go to the settings here, and under your company, you will find the chart of accounts right here. Alternatively, you can also go to the transaction and find the option right here. The third option is to use the shortcut Control Alt and A. And when you press this shortcut, you will be able to access the chart of accounts. The chart of accounts is a complete list of your business's financial accounts. Having a well structured chart of accounts in QuickBooks is essential for accurate financial tracking and reporting. To create a new account, you can click on New right here, and it will open a pop up where you can write your account name, account type, account detail. You can also create sub accounts, like let's say you want to access all your expenses. You can create a folder sub account, called expenses, and then list all your business expenses, daily expenses, and many more. And finally, you have the description. So let's say, for example, you want to give yourself a salary as an owner. You can write any name you want. Let's call it owner's salary. In the account type, you have to select the relevant type. So for this one, we will select equity. And in the detail type, you can further classify it. So for owner's salary, I'm going to select the owner's equity. Next up, you will write the opening balance. If you are starting from some opening balance, you will add it right here. And in this section, you will add the date from when you want to start the tracking. Finally, you can add the description here and click on Save. This is just the basic setup. We will talk more about this in detail in future videos. For now, I want to create some small videos explaining the account types and the detail types. For this video, I want to talk about the accounts receivable, which is the first account type, and it only have one detail type as well. In QuickBooks, we have 5 primary categories. The first one is the assets, which is the resources owed by your business, like the cash and the equipments. The second is the liabilities, which are the obligations owed to others, like loans and account payable. The third is the equity, which is the owner's and its partner's interest in the business. The fourth is the income, which is the revenue generated from the business operations. And finally, we have the expenses, which is the cost incurred to generate the income. Now, let's talk about the accounts receivable here. The accounts receivable refers to the money a business is owed by the customer for goods or services provided on credit. It represents an asset on the company's balance sheet because it is expected to be converted into cash in the near future. If I were to give a simple example, let's say you have a friend who borrows $20 to buy lunch. You know they'll pay you back, so you write their names and the account in your money owed notebook. Let's call it money. And that's your accounts receivable. Okay. And when your friend pays you back, you cross their name off and move the $20 to your wallet. And if you take another example for a real world example, let's say you have a business of the furniture and you sell custom made sofas. A customer orders a $3,000 sofa but agrees to pay the amount in full after delivery within 30 days or 40 days. When the order is made, you create an invoice for $3,000 in QuickBooks, and this action records the sale in the accounts receivable, okay, because the customer hasn't paid yet. And once the customer pays, let's say after 20 days or 15 days, the business records the payment in the QuickBooks, and the $3,000 is removed from the accounts receivable and added to the company's bank account balance. The accounts receivable is actually very important because it helps you track unpaid invoices and it ensures the cash flow is steady. It also shows you how much money the business is owed, giving the owner or you a clear picture of the pending incomes, and it helps you manage your credit. So you can see which customers are consistently late and adjust its credit policy accordingly. So this was the accounts receivable. In the next video, we will talk about the other current assets and all its detail types. Thanks for watching.